So let's look at funding. Funding for me is the lifeblood of property investing. Let's be honest, right? Without it, we wouldn't be able to do any deals whatsoever. It can certainly make or break your portfolio. Buy-to-let mortgages, for many investors, this is the stepping stone. You look at your interest-only mortgage that allows you to maximize your leverage and build cash flow quickly. But not all lenders are the same. You need to understand which product fits your strategy. For example, some lenders may like HMOs while others don't want to touch them. Knowing who to approach will save you time, and it will save you from those rejections later down the line. One of our favorite strategies at Klap Property Group is bridging finance. It's short term, it's fast moving capital, it's perfect for projects that aren't ready to be mortgaged. So think about those rundown terraced houses right in Hartlepool that you can convert into high yielding HMOs. A bridge loan gets you in. It allows you to do your refurb quickly, and then you can refinance onto a buy-to-let mortgage. And of course, it absolutely costs more money. We all know that there's always a cost to a bridge loan, but speed and flexibility often is worth far more than cheaper rates. Joint ventures. We work with a lot of joint venture partners that want to work with us because you're able to scale fast. You know, when it comes to joint ventures, you're able to pool your resources and go after much bigger projects that you wouldn't possibly have been able to go after on your own. But the key thing is transparency, and it's got to be a win-win. With joint ventures, you need to have clarity on your role, clarity on your exit, clarity on your returns, because ultimately it will avoid those pains later down the line. So being transparent with everybody throughout the entire process is the key requirement for a joint venture. And then finally, arguably the most unsexy bit about property investing is stress testing, but a very, very essential part, let's be honest, right? So when interest rates rise or tenants move out or your refurb overruns, you know, when you put these into your numbers and the deal still stacks, then you definitely have something you can pursue going forward. But if you don't, you will absolutely bleed cash. This is where most investors fall short. They chase the perfect deal on a spreadsheet. But let's be honest, property doesn't live on a spreadsheet. It lives in the real world. So when you plan for those surprises, you'll survive. If you don't, you will absolutely bleed cash.